Greetings guys, I am very excited to bring to you this wonderful video where I'll be speaking about support and resistance, which is one of the most important factors in the market. So I can guarantee you, once you understand how to deal or how to trade with support and resistance, you'll be unstoppable, because that's how the market behaves. That's how it changes direction. It changes direction through supply and demand, which is support and resistance. So in this video, I'm just gonna show you guys how to trade clearly with support and resistance, how to identify your entries with support and resistance, how to manage your trades, and also how to know if this support or resistance is a genuine one, meaning is it gonna show you a reversal, or it's just gonna be a market pause. So these are the things that I'm gonna cover in this video. So without any waste of time, let us just get started. So I'm here opening my chart. This is USD card, but just a disclaimer, you need to know that this knowledge that I'm sharing right now, it can work and it will work in any kind of market, whether it's indices, whether it's stocks, whether it's commodities, whatever market that we are trading, this information is applicable. So firstly, what you need to understand about support and resistance, support is usually the flow when the price bounce and go all the way up. For an example here, I have highlighted it, as you can see, and seeing the way I'm highlighting it, that I'm highlighting it through a zone, through like a region. However, some people do prefer highlighting it with a line like this. So what I can say is that it depends on how you interpret the price. But if you will be using lines like this, you'll find yourself missing other points. For an example, you can say this is support, and then because the line doesn't is not touched by this low, you'll then rule out this as a support. You say no, it didn't touch this line. So it depends on how you look at things, but I always advise you guys to always prefer using the zone or the rectangle tool here to just indicate your support or your resistance, to actually accommodate all those lows of the market. So here is a resistance. A resistance acts like a floor where the market bounces and goes all the way down. So what you have to know, guys, is that what makes these levels very, very important, or what makes a resistance important, it is when it has been tested before. So keep it in mind, a resistance should be tested before for us to say this is really important. However, we can have new resistance which haven't been tested before. The market, it can behave in new ways where we haven't seen before. But what makes a resistance more stronger, it is when it has been touched before. Even when it comes to support, a support that has been tested multiple times, it becomes a little bit stronger and stronger. Why? Because the price is moved by mass psychology, and usually people, they like to repeat their actions. For an example, if they bought price here at 1.25, it is likely that even in the future, when price come around 1.25, they will do the same thing. Same thing applies when price come around 1.258 somewhere, they will do the same thing. Same thing applies. So these levels, what makes them important, it is them being touched multiple times. So what I can say again is that you don't have to just look at support and resistance only on trends. I mean only on ranges. So even when the market is moving in a direction, it moves in a direction by also showing us some kind of lows and highs, showing us some kind of support and resistance. So you should be flexible even in that way. For an example here, where this upward move, and if you can look inside the upward move, you can see that we also have levels like support. We also have levels like resistance. So you should pay attention even on those areas there. So usually when the market shows you resistance or support in a trend, for an example, this is an uptrend. So if you see a resistance happening in an uptrend, this area here, if you see it occurring in an uptrend, usually it is there to pause or to give a corrective wave. It is not necessarily a reversal. So for you to see if a resistance is going to be a reversal, or meaning a resistance is going to be the best coming in the market for a long term, you should always focus on its previous support. For an example, we'll be paying attention to this support here. Once this support becomes broken, then that's where we can say, okay, we might pay attention to this resistance, which is likely to push the market all the way down because it has formed new lows. Now, I hope that is making a lot of sense. So another factor that is very, very important when it comes to trading ranges, usually you should pay attention to high volume, volume that take place in these highs and lows. So usually when there is high volume, it means that there is more participation, or there is so much feelings, and a lot of traders are making decisions. So for an example, we can see the spikes of volume here. Let me just try. Okay, we can see the first one here, which was indicated by this candle, and then when it comes to lows, we can see there was a spike in volume here, which was for this low. And because there was a spike in volume, we see that this low, it really became a significant low because price reversed, and price reversed again. And also here on this high, we have a spike in volume here, and indeed it marked it as a significant high because price reversed, and again price reversed. So you should pay attention to the volume. The volume, it tells you a lot about the behavior or the feelings of the traders towards that level. So support and resistance, these are levels that guarantee the direction of the market or the strength. Remember, what matters, it is the power between the sellers and the buyers, which side is strong, and then you go with that side. So we see that through those supports and resistance. So I hope this video was helpful. When it comes to, before I end this video, now when it comes to entering your trades, it doesn't necessarily mean that you should enter your trades immediately when price comes to the support. You should always wait for price to react. You should always wait for price to react and see what does price do in that level. For an example here, let me just erase everything. For an example here, we've seen that, okay, price came to the support level indicated before. It approached that level, and all of a sudden it gave us a reversal candle, which is this candle here. And before we could enter, we see the market, it formed a small high, and again it came back and formed a double bottom, with a lot of reversal candles which are pointing to the bull's side. So you can see that after this double bottom confirmation, then we're gonna say, okay, we are entering our buys here. So we didn't actually enter our buys immediately when it touched the area. So it is important, guys, to always focus on seeing a reversal pattern. Focus on seeing some things that will just show you that price is reversing, or price is going to the other direction. Don't just act there and there. Always wait for those minor confirmations. So that's it, guys. I hope this video was helpful. Remember to like, share, and subscribe.